the topic of positioning Malaysia as the investment hub for green investment and decarbonization. And as introduced by MC, I am Shubham, your moderator for the panel today. And I'm thrilled to introduce the interesting context and objective of this panel session. So we all know that Malaysia is growing leaps and bounds in inviting energy-intensive sectors to the country, like data centers. And at the same time, the energy demand in the country is growing multifolds, driven by increase in affordability, per capita income, etc. And in light of this development, there is a new frontier opening up, which is a increasing need for clean and renewable energy. The government has made its stance very clear, as we all know, right? Net zero by 2050, 37.8% renewable energies by 2030, and the 2025 budget was a very great indication towards this same frontier as well. However, the path to get there is not very straightforward, as we all know, right? So far, Malaysia's growth in green and renewable energy has been shaped by one common factor, which is the race to cheapest tariff. While this strategy drives adoption, but it is not sustainable. If Malaysia has to attract high-quality investments in green and renewable energy from global corporates, institutional investors, Malaysia needs to repackage the green and renewable energy as differentiated from fossil-generated electricity or energies. And there are three key pillars to achieving this pathway. The first one is strengthening the green and renewable energy ecosystem in Malaysia, orchestrating a cohesive group with all kinds of players in the ecosystem, be it operators, technology providers, financiers, regulators, etc. Number two is providing transparency and verifiability to the investors so that the concept as a whole becomes attractive to them. And number three is strengthening our regulatory frameworks, be it policies, incentives, subsidies, to just nurture this environment. Now, with this context in mind, I am privileged to have a very esteemed panel of guests with me today, starting with Mr. Noor Hafifi Jalal, who is the head of business development at UEM Lestra Berhad. He is spearheading large-scale renewable projects and pioneering new market mechanisms for clean energy. Welcome, Hafifi. Then I have Muhammad Rizal Azmi, who is the Vice President of Business Development and Product Development, Business and Product Development at Bursa Carbon Exchange. He is driving carbon market innovation and transparent price discovery through the CRESS program. Welcome, Rizal. And then I have Lao Manlung, who is the Regional Head of Project Finance, Investment Banking and Advisory at Maybank Securities, bringing the perspective of how capital markets and financing tools can capitalize Malaysia's green economy. Welcome, sir. To start off, I would pose an open question to all of my panelists. We started with this vision of positioning Malaysia as the investment hub, right, for green energy. And we know that there are strides of development happening in Malaysia, be it renewable projects, investments, policy frameworks. But if I were to ask you personally, what does it mean for you when I say that Malaysia has to become the investment hub for green energy? And what must we get right to get there? Maybe we start with you, Hafifi.
Thank you, Shubham. Good morning, everyone. To address Shubham's question, let me put things into perspective. Malaysia has already has a strong fundamental for becoming an investment haven for investors. For a start, we have stable government and matured capital market, and not to forget robust grid. So that being said, in order for us to become ASEAN's hub for green investment, It's not merely about attracting funds. It's about building credibility, scalability, and staying power, or in other words, reliability. At Lestra, we see this as a transformation from a price-driven renewable energy market, like what you said earlier, racing to the bottom. Instead, we are focusing more on value-anchored one, where investors, off-takers, and financiers can trust that projects are bankable, traceable, and future-ready. That being said, Malaysia's advantage lies in the ability to connect three interlocking pillars. One would be a bankable infrastructure, grid-ready projects like our National Energy Transition Roadmap project down there in Johor, that we will set new standards in technical readiness and long-term reliability. Second would be transparent market, hence why we are collaborating with Bursa Exchange in order for us to build one. And last but not least, it will be policy certainty. So a stable framework that gives investors confidence to commit billions over decades, not just years, is very crucial. If we get these three right, I think Malaysia can lead the region not only in green power generation, but also in green credibility. Thank you.
Very nicely put. I like this, not generation, but also, not only generation, but also credibility. Thank you, Hafifi. If I move to you, Rizal.
Thank you, Shubham. Thanks very much. It's a pleasure and honor to be here at the ASEAN Energy Business Forum today. So I think your question, what must we get right to achieve this target to get Malaysia to be region's hub for green investment, right? That's probably a long list of answers that I can give, but I think to pick on what Hafifi also mentioned, I think what's clearly important is a very clear policy and regulatory framework. And perhaps to understand that a bit better, we can have a look at the history of the policies in relation to green energy in Malaysia. Not sure how familiar the audience here is with the history. I think we started off with the four fuels policy back in the 1980s to encourage not just oil and gas, but also coal and hydropower to be the energy resource for Malaysia. And then we further moved to the five fuels diversification policy in the early 2000s, which is where we had renewable energy as part of the fuels. And I clearly remember the target because it was mentioned that we were to achieve 5% renewable energy capacity by 2005. So five fuels, 5% in 2005, which we sadly did not manage to achieve at that point in time. And then later on, we had the Renewable Energy Act in 2011, which also led to the establishment of the Sustainable Energy Development Authority, SEDA, in that year, which is to implement the feed-in tariff. So I think that's quite a monumental occasion for the Malaysian renewable energy market, which saw an added premium for renewable energy projects in Malaysia. And then, of course, SEDA also implemented or launched the Malaysian Renewable Energy Roadmap 10 years after that, which is to increase the target to 40% renewable energy in 2035. And of course, I guess everyone remembers, as also what Hafifi mentioned, the newest National Energy Transition Roadmap, which brings our target to a further 70% renewable energy capacity by 2050. So those are very ambitious targets, but we also need a clear implementing guidelines on how to achieve those targets. So certainly our ambition has improved, and we definitely can also do more than that as technology matures and we get more access to funding, of course. And yeah, looking at Manlong there. But I guess to summarize, for policy and regulatory framework, I like to cite what I've heard many panelists have talked about before, including my boss, the head of carbon market. When we talk about policy, we always talk about the three Cs, which is the certainty, clarity, as well as consistency in developing policies and regulatory framework. So I think that's key for me. Thank you.
Thank you, Rizal. A very interesting take on how policies and frameworks are going to be a championing pillar in this journey. And thank you for taking us through the journey. It was very enlightening, I suppose, for the audience. If I move to Manlung, what do you think is your take? What must we get it right?
I guess morning, everybody. So I guess my take is I would divide my response into two parts, right? One is in relation to the energy market, and the other one is in relation to financing, since I'm a banker, right? So, in relation to energy, again, for Malaysia to be a hub, I think for energy generation and dispatch, Malaysia will go through three levels, I think. First is towards self-sufficiency, where Malaysia produces all the green energy it needs for internal consumption. Second stage is perhaps when Malaysia is able to export some of its green energy via bilateral links to neighboring countries. The third stage is when Malaysia sits at the center of the ASEAN power grid, possibly trading energy that is sold from one country to another within ASEAN. So I think in terms of energy, there'll be three stages. If we can achieve, I think the first stage, we are already well on the way there. The second stage, there's been some developments, and I think some small amounts has been sold, but there's big projects that are still being discussed and undertaken. The third stage, which would require the ASEAN power grid, which would require a lot more countries to get involved in, might take some time to be realized, right? The second thing I think Malaysia can look at is in relation to producing components needed for green energy, right? So maybe moving beyond assembling solar panels to other parts of the value chain, in Malaysia. I think that would really position Malaysia as a hub, right? So that's in relation to the energy market. The second thing I think in relation to financing, Malaysia extremely well suited for financing. And very, very few countries in the world, if any, has a deep sukuk market, right? Which is able to issue bonds for greenfield projects. So I think most other countries depends on loans from banks to finance greenfield projects. We have that in Malaysia. But on top of the bank loans, we also have a very vibrant sukuk market, which are prepared to offer long-dated fixed rate financing for bankable projects, right? And I think the key word here is being bankable. I think as Hafifi and we all talked about. Banks are very keen to throw money at bankable projects. Importantly, I think for the sponsors is to consider banking terms as part of their consideration early on as they develop the projects. It's really no good to come to the banks and say, hey, look, I've got this, I need to finance this. But the terms are something which the bankers cannot accept. Then you're going to left with a project that isn't going to go very far. I think very fortunately, we have seen most of the projects in Malaysia has been successfully financed. So I think that's a step in the right direction. But bankability is important. Yeah. All right.
Thank you so much, Manlung. And thank you for sharing your pathway of getting there, filled with caution, very characteristic of a banker. So thank you so much for that. And also, it's very reaffirming to note that all of you have raised basically the three pillars on which we wanted to base this discussion, which is to strengthen the ecosystem, strengthen the policy framework and regulatory framework, and improve transparency and verifiability between investors and the industries. So it's very reaffirming to note this. And probably on this point where, leading on and following up on one of the statements that Manlung mentioned, which is around scaling up for self-sufficiency and probably the stage 2, which is supporting our neighbors. Hafifi, you have led a pioneer project, right? Lestra has led like 1 gigawatt solar project in Johor, which is a transformative initiative in the entire region. And I probably for the benefit of the audience and also for my curiosity, want to learn more about how far this project has gone in strengthening the green and renewable energy ecosystem in the country. And if there is an entrant in this industry, how can they learn to scale a reliable, clean, and export-ready energy stream from a project like Lestra's?
All right, let me take a minute, try to form my answer. Okay, bankability, that's the key word. Um, being someone with a lot of bank loans myself, one thing that we need to make sure that the project is credible, which leads to bankability. So we don't talk much about this project. I think let's have a discussion on the project that we're trying to build in Segamat. So one thing for sure, this project is designed to not just becoming a power plant, but also becoming a renewable complex. So it is not just a typical solar farm. It is a solar farm integrated with battery energy storage system. And to be precise, we're building close to 900 megawatt peak of solar farm. One of the biggest, if not the biggest, you would have seen by 2028, coupled with close to 1 gigawatt hour of battery energy storage system. So yes, a renewable complex in totality. And this particular project, it addresses three major challenges facing renewable integration here in ASEAN. So first, we address grid readiness. By co-locating the best system, we are going to help the grid owner, in this case TMB, to smoothen the intermittency, provide firm export profile, and potentially reduce curtailment risk. Again, relate back to bankability. If you get curtailed, then the project is a bad project because you can't make money out of it. So second would be investor bankability. We structure the NETA flagship project as a project finance ready asset, which means that we align it with engineering standard, a balanced PPA, we'll talk more about it later, permitting and land readiness align with lenders' expectation. And third, replicability. Okay, this is the part where we would think that in Lestra, what we're trying to do is making sure that whatever that we do for a start can be replicated throughout Peninsular Malaysia in many other sites, but this one will become the template. Ultimately, the NETA flagship project demonstrates that Malaysia can deliver utility scale, investor-grade decarbonisation infrastructure. Not just at the lowest cost per kilowatt hour, but with the highest confidence per kilowatt hour.
And thank you so much for that, Hafifi. This is very enlightening. If I am to pick, let's say, one of the three factors which was instrumental in making this project happen, was it the ecosystem in Malaysia? Was it the bankability of investors? Or was it the regulatory framework or support from government? Which one would you pick as the top enabler for this project?
Look, aligned policy is great to have, but just like what I've mentioned in a previous forum yesterday, that we will work with what we have on the table, right? The regulator, the ministry are trying their best to balance between the ask from the industry and also the integrity of the system. We appreciate that. That's why we're working closely with them in making sure that whatever that we do will not compromise the system. But if I can put it in a nutshell, what we are looking for right now is to find ways in making sure that this project is replicable. So if you can make it happen once, you can surely make it happen in the next one or the third one. So yeah, I would say that we will use whatever being offered to us in terms of policy and making it possible to be implemented. Right.
Thanks, Hafifi. And I think for people in the audience, if we can take away 3 things from what Hafifi mentioned, this pioneer project. Number one is work with the constraints, but use them wisely that you have. Secondly, try to optimize the efficiency with relentless focus on value. And thirdly, remember that you are in here for a long run. You need to replicate and scale it, not just for your economic benefit, but also for the regions and the country's benefit. Thank you so much, Hafifi. That was very interesting. And I think this just brings me to a bridge between what you and Rizal have been working on, or what your companies have been working on. So you mentioned about making it verifiable and accessible to the consumers, which in this case would be likes of TNB, right? And I want to understand what role does Bursa Carbon Exchange and the CRES make in making this happen and in making this accessible to your consumers? And how does it align with the broader vision of making renewable energy in this country both credible and, like Manlung said, bankable? So I'll start with you and then I'll go to Rizal.
All right. Again, this is about finding the off-takers for our project, right? Because this is a new scheme introduced by the government, and we are 100% trying our best to support such initiative. But we found out that there is something that is lacking to get those off-takers, to be able to lure them and use and off-take our green energy from this particular project. So we were, Lestra started off with a small team, and all of us were busy with making sure that this particular project is happening, and we are working on all the we're working around the complexity of the engineering behind it. So we were thinking back then that we need help. So, and then I was thinking, and I was saying to my CEO that we need to find a way so that we can have like a seamless channel to get to these off-takers. And what would be great if we can have somewhat like a matchmaking platform for us to put our profile out there and making sure that someone would buy it, right? So I reached out to Rizal, and when he was working on his carbon platform at the time, and then I asked him back then, can you actually do the same thing with us? What if we put up our PPA on your platform and let your corporate off-takers look at it and making sure that that they will be interested in off-taking our green energy. So rather than buying carbon credits, would you like to buy green electrons from our plant? And result took a while, and he came back in a couple of weeks' time, and he said, I mean, this thing probably can happen. So that's where the relationship started. So basically for investors, this particular platform is about price discovery and risk transparency. So when I said about risk transparency, what we will do is we will release information about our projects. You will know details about our project, okay? And then I've told Rizal back then too, this is not just for us, and for all the developers in the future that they can participate in. So we are going to set the standard and the way forward for people to copy. So what we will do is we will put up the detail of our project, kind of like a profile of the project, where the project will be, the status of the land, the approvals acquired, the technology used, and the amount of credible green energy that will be produced from the plant itself. And ultimately, people at the end of the day would want to know how much does it cost for them to offtake, right? So yeah, this is to address the risk transparency for the investors and also for the off-takers. And for the corporate buyers, it is also mean that they can have confidence that for every kilowatt hours sold, it is backed by certified RECs and aligned with their ESG standards. So in essence, this so-called BSE auction platform will transform renewable energy from a subsidy-driven product into a financially credible commodity. So that's our goal. I will leave that for Rizal to elaborate further.
What an interesting matchmaking story. Ladies and gentlemen, we have Wright brothers or Steve Jobs or Steve Wozniak of renewable energy here. But you raised a very important point, and I think thank you for being patient with me, Rizal and Manlung. I mean, I'll get to you, so don't worry. But I think just following up and leading on what Hafifi mentioned, we know that Bursa Carbon Exchange has signed a memorandum of collaboration with UEM Lestra in this July of this year to utilize this auction as a service platform. And this is to facilitate auctions for the CRESS program. This would, as I understand, be a key step, and Hafifi was also highlighting, in providing transparent price discovery for renewable energy. What I want to understand from you, Rizal, is how this platform will actually work for our larger audience, and how can it attract long-term investors and corporate buyers who are seeking measurable decarbonization in their own ecosystem?
Okay, thanks for that. Yeah, I think I have to give credit to Hafifi and Lestra team because when they approached us earlier this year, it was a relatively new concept, and so we took a bit of time to deliberate internally. I think a couple of weeks getting back to them was considered fast in our organization. But I guess the gist of it is because we have been doing auctions in the past already for carbon credits as well as RECs. So I think just also to share a bit of history, we started off the Bursa Carbon Exchange in December 2022, starting off to trade the voluntary carbon credits in the voluntary carbon market. And then we started also trading RECs in 2024. So when we had this opportunity to also look at how to auction renewable energy projects on our platform, then of course it's something that we have to definitely consider as it opens up, price transparency as well as price discovery for RE projects, specifically solar projects. So we've known the CRESS program since its launch in September 2024, but it's basically matchmaking which you need to do one-to-one. So when Lestra approached us and offered, or rather wanted to utilize our auction platform, so that's why we offered what's called our auction as a service. And this is basically how project developers can actually come in and subscribe to this program, to this platform. And once they are subscribed, we can conduct these auctions on their behalf. So for the developers, this is where they can actually put up their solar projects, particularly their CRESS projects, and find the potential off-takers in that particular platform via an auction. So of course, it's not just for Lestra, as how Hafifi mentioned earlier. It's open to all the other project developers as well. Of course, in the CRESS program, you have to find your off-takers first before you can actually reach your financial close, eventually start your construction and commission the project. So you don't actually auction a live project. It's not a spot basis like what we've seen in other markets, like in Singapore and all that. So it is something relatively new in the Malaysian market, and hopefully also paves the way for a more open and transparent electricity market. And of course, for the off-takers, this is where they can come in and they can actually bid for the specific price, for the volume that they wish for, at the parameters that are set by the project developers. So to a certain extent, the auction is configurable. So you can set your floor price, how much price per kilowatt hour you can start off with. You can also put in how much volume of energy that can be auctioned. So, for example, 100,000 megawatt hour per year. You can have a tenure of a shorter tenure, 5 years, 10 years. You can have a longer tenure, 21 years. So we can configure all that, and we just put up the auction, and we bring in all the off-takers, and they can simply bid for any price and volume that they wish for. So essentially, that's how it works. Of course, I need to show how that works in an illustration, but just to explain it, that's how it would look like. Thanks.
Thanks, Rizal. I was wondering if you can use the slides. That's a fantastic explanation. And ladies and gentlemen, this is an amazing example of how innovation and strategic partnership can drive the entire ecosystem. I mean, the way the auction as a service platform built with UEM Lestra and then taken for the CRESS program brought energy closer to the end user is amazing, right? And something for all of us to learn. Thank you, Hafifi and Rizal, for sharing this. And that really, gives the explanation of how we can capitalize on the first pillar that we talked about, which is strengthening the ecosystem. And which is when I want to move to the second pillar, switching gears with Manlung, and talk about financing and how we can bridge the gap between the investors and the industry. But firstly, I would start with something very basic. So, from your perspective of being in the industry, being an investment banker in project finance, and seeing green and renewable energy grow from the bottom like scratch, right? What are some mechanisms that you would suggest to the entrants or even to the established companies, like you were talking about green bonds, sustainability-linked instruments, that they can capitalize on, especially to mobilize large-scale capital, because this industry needs large capital, right? So it would be great if you can throw some light on this.
Sure, sure. I guess if I take a step back, right, and come back to the word of bankability, right? So in any project, there are three major groups of stakeholders, right? One, the developer, whose objective is to have a successful project, make money, obviously. Two, the customer. In this case, they want green energy at the cheapest possible cost. Third, the financiers, right? By financiers, I'm talking about banks as well as pension funds, sukuk investors, and so on. So within these three groups of stakeholders, everybody wants to see a successful project, right? So that's where the commonality is. Where there are differences would be everybody would be trying to push and seek the best objective for itself, right? So developers want to make money, have a high return, customers want low price, bankers just want to get their money back, essentially, right? And
that's not true, but yeah, I mean, you want premium, right?
Yeah. Small one, So I think is this process that I think all three parties have to sit together and slowly develop a common understanding of what the market permits and accepts and what it doesn't. A bit of saying, there's a Chinese saying that you feel the pebbles beneath your feet as you cross the river. Especially, I think, in this particular case, where the CRESS, for example, is a relatively new mechanism. So as we develop together, right, it will take a lot of effort from all three parties to see each other's point of views and then reach a bankable solution, right? It is important that not one party pushes too hard, because if you push too hard, right, inevitably one side cannot accept, and then you lead to a stalemate, which is not what the sector needs, right? The sector needs sustainable, not in the energy sense, but in the deal flow sense, sustainable commercial structures that can be replicated at scale, right? So that's the bankability part of it. You mentioned SRI bonds and green bonds and all that. I think all those are very useful. And I think they do give investors a lot of motivation and encouragement when those bonds are classified that way. But at the end of the day, bankability is still the number one. Get a bankable deal in place, then we think about how it should be classified and labeled, I would say, yeah.
Well, thanks, Manlan. And probably to elaborate a bit on the next step after bankability. So let's say we have some entrants or established companies who have achieved comfortable bankability within the ecosystem. But in order to grow and get access to the large-scale capital, If you were to rank like top 3 instruments, financial instruments, and give a bit more explanation why they are top 3, that would be very interesting for our audience. Yeah.
I would say, I think in Malaysia for long-term fixed rate funding, Sukuk is probably the top instrument. But that requires a rating. I think there are some projects that are suited to have a rating. There are some projects that are less suited to have a rating. So usually, I think the first preference, because of lower cost, longer tenor fixed rates, Sukuk is the preference. And then bank loans, if somehow Sukuk is not suitable for those projects. I think within each of those categories, if you would like to, go for SRI Sukuk or green Sukuk, or even bonds as well, loans as well, then the issue is how do you make that special, right? I think in the West there has been a few deals done where if you meet certain emissions standards, you actually get a reduction in rates, right, of the coupon or the margin. There's also been deals done where if you don't meet certain budgets, emission targets, you get an increase in rates and margins. So I guess this is the perpetual tussle between the two groups. Do you do the carrot approach or do you do the stick approach? I think in Malaysia, there's been a few deals like that, not that many. Again, the market will evolve over time, and we'll see how that goes. Yeah.
No, thanks, Manling. Very interesting take on that. And I think whenever we talk about bridging the gap between financiers and the industry, we talk a lot about what could work for investors and could be enabled by the industry. But I think in between these two, there is the local capital market that also has to play a significant role. And Hafifi alluded to instruments like RE certificate, right? How can this local capital market improve the verifiability of the targets that industry are setting, of the process that they are building, so that not only they attract like local investments, but also foreign investments? If you could throw a bit of light on that as well.
Right. I think one important thing which Rizal mentioned was in relation to consistency and certainty. Very important, those two C's, right? Those REC targets, certificates and all that, I think those are great. For banking, right, we want to be sure that the value is reasonably predictable and the regulations stay consistent. Because I guess we're not talking about short-term financing of 6 months, 1 year, 2 years, 3 years, where you can kind of see the horizon. If you're talking about a 15, 20-year loan, you really need for the mechanisms and the policies to be consistent for those 15, 20 years. And the price to be reasonably predictable over that period of time. So I guess that is the challenge, to give financiers the confidence that consistent is going to be there, certainty of the policy is going to be there, and relative predictability of the prices. Yeah.
Very, very nicely put. And I think this also resonates with the growing trend, like when we talk about verifiability or credibility, building credibility with investors, a lot of players today still think in terms of certificates as ratings as the #1 instrument. But thank you for throwing the light that it is an important part, but there is more to it. And there is more to it beyond the control of an industry, which is the entire local setup. So thank you so much for bringing there. And on that point, I want to switch gears to our third pillar, which is around the regulatory framework, be it in terms of policies, incentives, subsidiaries, government support, local body support, as being the key enabler for the growth of green and renewable energy in Malaysia. And this is probably an open question across the table, and I'll go one by one on that. What I would like to understand is, based on this vision that we have set for ourselves, we want to be an investment hub for green and renewable energy. We have made a good start, but there is a lot to do, as Rizal was alluding. And as Hafifi was alluding, there are constraints, but we need to learn to live with them. But in light of all this, what policy or frameworks come to your mind, like in the split second, which could take to a transformational growth journey for this industry? And I'll start with you, Manlung.
I guess for me, the top of the list would be carbon tax and how the government is going to implement that going forward. I'm sure a lot of discussions are happening on that front, so we'll just have to wait and wait for the announcements from the government.
Yeah, I mean, I like how you like to be diplomatic, but if I can ask you to please elaborate a bit your take on how carbon tax should be implemented, how this policy should be brought out.
Difficult question again, right? Diplomacy aside. There are, again, various stakeholders in this discussion. As you know, well, high carbon taxes will lead to increased investment in green energy. Obviously, there's a cost to it. That cost has to be borne by some parties, right? That cost has to be borne by perhaps the normal population, the government, businesses. So I guess it's getting the right balance, and every country is going through this thinking process. Different countries would have different approaches to it, and you know, I think that's really balancing the interests of all the various stakeholders in each country to get the best possible outcome for that country.
Okay, thanks, thanks Manlung. Rizal, if I move to you, I think Manlung touched to the larger carbon tax and attracting investment part of policy framework. What would be great to understand from you is how these frameworks could, you know, increase partnership between, let's say, developers or the industry and other players such as technology providers or local capital markets.
Well, I guess I can give the collaboration that we have with Lestra as one of the examples of utilizing a digital platform to, you know, bring a type of energy, such as renewable energy, into an open, transparent market. So I think that that's one good example that we can have as a starting point. Of course, to open it up to a full, transparent market like what's available in developed countries is, you know, the next step to that, to open it up. But that would probably take a bit of time as well. Perhaps I would like to just add a bit on to what Manlung was saying about the carbon tax, particularly the carbon pricing instrument in Malaysia. We just concluded yesterday our Malaysian Carbon Market Forum, and it's graced by YB Datuk Sri Johari Ghani, who started with an opening remark. And of course, he touched also a bit on the carbon pricing instrument. And Malaysia is developing that, and it's almost towards the end, talking about two key, one is a policy and one is a regulatory framework. So the climate change bill, Undang-Undang Perubahan Iklim Nasional, and also the policy, which is the National Carbon Market Policy, or Dasar Pasaran Karbon Kebangsaan. So these two are instrumental in driving sustainable investment in Malaysia, because it gives a clear carbon price, such as you know, what's already in Singapore. The carbon tax started off with 5 Sing dollar, and now it's fivefold, 25 Sing dollar, and supposed to increase further to 40 Sing dollar and beyond. So that's a clear indication of prices for carbon, which we do not yet have in Malaysia, because we only have a pricing for the voluntary market. But if we talk about renewable energy in particular, then I guess that's still a missing link, because we do not yet have a compliance mechanism for renewable energy, such as what's available in Philippines, which they have the Renewable Portfolio Standard, the RPS, and also in India. So that's something perhaps the energy sector can also look at to help encourage you know, the renewable energy certificates market, the renewable energy market, and its related markets as well. Thanks.
Thanks, Rizal, and thank you for mentioning two very important topics. Firstly, the carbon pricing, and secondly, frameworks in renewable energy. And you sort of touched upon it, but probably would be beneficial for us to understand more. Do you see a link between these two? And if so, then how do you think the regulatory framework can improve that linkage?
Well, that's a tough one, because if we look at carbon pricing in most markets in the world, they typically will focus more on the scope 1 emissions of facilities of companies. Because for companies, scope 2 is basically energy that you purchase from outside of your value chain, outside of your supply chain, which is electricity from the grid, for example. And if we do not have a compliance mechanism for that, then it's a bit tough to move that needle significantly. You know, you have to rely on buying energy from the CREST program, for example, or bundled racks from such as TNB's green electricity tariff, and then unbundled racks and so on. So if we have a clear compliance mechanism for racks for renewable energy, then it can perhaps help in that regard. Thanks.
Thank you. Moving to you, Hafifi. Manlung says that there is a need to develop federal policies and governance around this topic, which can help facilitate and nurture the industry. Rizal goes a step down and says, once we have this environment and ecosystem, we need to strengthen the links between different moving parts, such as carbon pricing, renewable energy frameworks. What would be great to understand from you is probably one step even more granular. For a developer or an industry player, you mentioned that today, UEM Lestra succeeded with the constraints on the ground. But how would you like the regulatory bodies to ease out those constraints so that the path even becomes smoother for you in order to grow?
I do have a wish though. Yeah. But Manlung talk about carbon pricing, so does Rizal. But I think if we really want to make things happen, you don't even have to go that far. Carbon pricing is new to everyone, even in a more matured market. And what I'm about to say is slightly controversial, but something for the regulator or ministry to ponder on is the subsidy. The removal of subsidy would help a lot. We can start by doing that first. We're talking about trying and cracking our heads, try to figure out what will be the best innovative way to provide green and affordable energy. And we are comparing that to a subsidized commodity. I mean, how can you make sense out of that? So don't be too gung-ho about the carbon pricing. It will come, but it will take some time. But what is in front of us is an elephant that no one wants to talk about, the subsidy itself. Start with that and see how it goes. Then we talk about carbon pricing.
And I think that very smoothly ties back to the context with which we started this panel, right? Everyone is after the cheapest tariff. It can drive scale, but not sustainable in Manlung's word. You need to repackage it as a differentiated product, right? Probably as a premium product or somehow differentiated from fossil-based energy. So very neatly ties back to that context. And I think we covered all three pillars very nicely: strengthening ecosystem, improving verifiability, and strengthening the policy framework as we laid out in the beginning. Probably as a closing remark, but don't feel restricted to one sentence or two sentences on this. Feel free to go for 10 to 20 sentences. But what I would like to hear from you is, if all that we talked about, probably our wish list, were to happen for Malaysia by 2030, then what would success look like to each one of you? And for this one, I want to start with Rizal.
Sure, thanks very much. So I guess we've talked about multiple different angles in this discussion today. But perhaps what I envision that would look like in 2030 is also what we just discussed a bit earlier, which is a clear carbon pricing instrument. And that could come either in the form of a carbon tax or even an emissions trading system, an ETS system, or even a hybrid, a combination of both of them together. So the market design is quite important because it would help spur further decarbonization and help to spur more carbon projects, green projects, as well as renewable energy projects. And as also alluded to earlier, that we are probably lacking a compliance renewable energy market. So that's something that perhaps we could evaluate and look at in our market. Of course, baby steps, we need to start somewhere, but we've had, quite clear, quite recent change in the electricity tariff, for example. So that brings about a more transparent pricing mechanism. We can see clearly where our money goes to in terms of the tariff, in the capacity market, in the energy market, and so on. So those kind of things help bring clarity to the off-takers, to the developers, and so on. And we hope to see more of that as well. Thank you.
Thanks, Rizal. Carbon pricing mechanism. Lun Mung, if you want to go next.
So for me, I guess in 2030, right, if Malaysia is self-sustainable in its green energy and has started exporting energy in a big way via various links to other countries by 2030, I think that will be a good time. And also at the same time, if more of the equipment and the components were actually designed, built, manufactured, assembled in Malaysia, I think beyond solar panels, I think that would be a pretty good move. And of course, for financing, hey, why can't we finance more of the regional projects? Yeah.
Okay, export-ready energy stream, in-house manufacturing, and bankability, right? Okay, very nice. Hafifi?
All right, that's a good question. How does success look like in 2030? All right. Okay. The energy guzzlers in Malaysia, the medium voltage guys, the high voltage guys, and the ultra voltage guys, they are consuming about 140 terawatt hour of energy annually. Let me put things into perspective. As huge as our 1 gigawatt project in Segamat is, it is only producing about 1 terawatt hour of green energy per year. And currently, all these energy gases, they're consuming 140 terawatt hour. By 2030, if we can actually capture 30% of the market, which means that we have achieved and replicated to about 40 times of Segamat project by that time, and Manlong start driving a Bentley down there in Singapore, we are at a very good stage.
He probably already is.
Yeah.
No?
Cars are expensive.
Okay, renewable energy mechanism, future export-ready energy stream, in-house manufacturing, bankability, and a Bentley. So this is how we describe what good looks like for Malaysia for 2030. Very quickly as a departing thought, and I promise this is the last question. We know the future, we just talked about the future, how good it could be and what good looks like for that. But for the present, if you were to describe the green and renewable energy situation in Malaysia today in, let's say, 5 words, how would you do that? And this time we start with Hafifi.
Well, it has potential. It is doable. But what is lacking is strengthen collaboration between all parties. We need to have more discussion on this between the industry players, the suppliers, the EPCC contractors. All of us we need to gang up and try to convince the government on the right way forward for the industry. Then we can see that 40 projects happening in 2030.
Thank you, Hafifi. Rizal? Yeah, I guess we've come quite a long way. We had, as I mentioned in the early part of my my responses, that we had the earlier target of 5% renewable energy by 2005, and increased it to 40% by 2035, and finally 70% by 2050 in the latest roadmap. But yeah, we've come a long way, but we definitely can do more, and we definitely should. Thank you.
For me, I think the evolution has been pretty good, right? So we went from pre-LSS to LSS 1, 2, 3, 4, 5, 6, and so on, right? Where the plants were like 50 megawatts to, then it went smaller, 30 megawatts, then it went to 100, and now we're at 500, 1,000 plus batteries. So it's been a pretty good evolution. Again, a bit more of feeling the pebbles beneath your feet as you cross the river, and hopefully we reach the river without toppling into the river, which we have done pretty well. I think there's been no major upsets along the way, yeah, unlike some other countries which actually fumbled. So I think, yeah, pretty good solution right now. Obviously, more room for growth. Yeah.
Thank you so much, Lunmung. And thank you so much, all of you. I think what we have discussed and sort of established here, that we have come a long way. There is potential, a very strong potential to grow. We need to be cautious of the path and probably check ourselves against the ambition that we have set. In order to do so, I will go back to the same 3 pillars because we keep coming back to that. We need to strengthen the ecosystem, the relationships between the suppliers, developers, technology providers, etc. We need to improve the verifiability and credibility. And then thirdly, we need to strengthen the policy framework to support the industries. Thank you so much, gentlemen. It was an insightful discussion. Thank you so much for your time. And thank you so much, audience, for listening in and contributing. Thank you so much.
Thank you very much to our panelists and, of course, our moderator. We'd like to invite the gentleman to the front of the stage for a group photograph. And that was a panel discussion on ASEAN's Hub for Green Investment.